In our earlier video, we discussed about the syllabus of financial management. Now, we start with the first unit, that is introduction. Business finance is the money you need to establish and run your business, which includes modernizing or diversifying operations and expansion. The more successfully you manage your money, the higher your odds are for profitability. The term business finance includes the ways in which a company obtains and uses money, usually in reference to loans. And in the broader context, business finance is about strategies for earning, saving, and investing revenue. Meaning of business finance. Business finance includes the information contained in financial documents such as profit and loss statements, balance sheets, and cash flow statements. It also covers strategies that businesses typically use to manage their money, such as leveraging future rather than present value. Armed with this knowledge about how money flows and grows, you will have the tools to make strategic decisions for managing your business's finance and take advantage of opportunities. Student, for example, you may have a choice between two loan products, one of which has a higher interest rate and flexible terms, while the other has a lower interest rate but rigid terms. Understanding business finance gives you the know how to evaluate how much you will likely spend repaying either of these loans in higher or shorter repayment times. You will need to review your circumstances in depth and all the cost associated with the product you are planning to develop. Definition of financial management. Financial management is an area of financial decision making, harmonizing individual motives and enterprise goals. Seized by Weston and Brigham. Other definition is financial management is concerned with managerial decisions that result in acquisition and financing of long-term and short-term credits for the firm. As such, it deals with situations that require selection of specific assets and liabilities as well as problems of size and growth of an enterprise. Analysis of these decisions is based on expected inflows and outflows of funds and their effects on managerial objectives. See it by Philippatis. स्टूडेंट्स, ये दो डेफिनेशन हैं, ये बहुत इम्पॉर्टेंट है फाइनेंशियल मैनेजमेंट की. क्या बोला है ये दो डेफिनेशन में? फाइनेंशियल मैनेजमेंट क्या है? एक एरिया है, इज़ एन एरिया ऑफ फाइनेंशियल डिसीजन मेकिंग. उसमें क्या होता है? फाइनेंशियल डिसीजन जो है वो लिए जाते हैं. क्यों लिए जाते हैं? मोटिव्स, इंडिविजुअल मोटिव्स एंड एंटरप्राइज गोल्स. एंटरप्राइज के जो गोल्स हैं वो अचीव करने के लिए डिसीजंस जो है वो लिए जाते हैं. उसको क्या बोलते हैं? फाइनेंशियल मैनेजमेंट. वेरी सिंपल एंड easy definition made by Weston and Brigham. Scope of financial management. Scope of financial management are divided in 4 categories: investment decision, working capital decision, then dividend decision, and financing decision. Investment decision, evaluating the risk involved, measuring the cost of fund and estimating expected benefits from a project comes under investment decision. It is one of the important scope of financial management. The two major components of investment decision are capital budgeting and liquidity. Second one, working capital decision. Decision related to working capital is another crucial scope of financial management. Decisions involving around working capital and short term financing are known as working capital decision. It also manages the relationship between short term assets and its liabilities. Dividend decision. The dividend decision plays a crucial role in today's corporate era. It determines the amount of taxation that stockholders pay. A good dividend policy helps to achieve the objective of wealth maximization. Distributing the entire profit in the form of dividends or distributing only a certain percentage of it is decided by dividend policy. It is known as deciding the optimum dividend payout ratio, that is, the proportion of net profit to be paid out to shareholders. Financing decision focuses on the accountabilities and stockholders' equity side of the firm's balance sheet. For example, decision to issue bonds like a kind of financing decision. The main aim of financing decision is to cover expenses and investments. The decision involves generating capitals by various methods from different sources in relative proportion and considering opportunity cost with respect to time of flotation of securities. Next, nature of financial management. Primary nature of financial management focuses towards valuation of company. That is, the reason where all the financial decisions is directly linked with optimizing or maximization the value of a company. Finance, functionally like investment, distribution of profit earnings, rising of capital, etc., are the part of management activities. Nature of financial management basically involves decision where risk and return are linked with investment. Generally, high risk investment yield high return on investment. So, role of financial manager is to effectively calculate the level of risk company is involved and take the appropriate decision when which can satisfy shareholders, investors or founder of the company. Next nature is finance is a foundation of economic activities. The person who manages finance is called as financial manager. Important role of financial manager is to control finance and implement the plans. For any company, financial manager plays a crucial role in it. Many times it happens that lack of skills or wrong decisions can lead to heavy losses to an organization. Next nature, financial management is an important function in companies' management. Financial factors are considered in all the company's decisions and all the departments of an organization. It affects success, growth, and volatility of a company. Finance is said to end up being the lifeline of a business. Next, finance management is one of the important education which has been realized worldwide. Nowadays, people are undergoing through various specialization courses of financial management. Many people have chosen financial management as their profession. Next nature. The nature of financial management is never a separate entity. Even as an operational manager or functional manager, one has to take responsibility of financial management. Next, nature of financial management is multidisciplinary. Financial management depends upon various other factors like accounting, banking, inflation, economy, etc. for the better utilization of finance. Last nature, approach of financial management is not limited to business functions, but it is a backbone of commerce, economic, and industry.